You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 14th day of May, 2019. So glad to have you with us, whoever you are, wherever you are. We're just glad you're right here, right now. Thanks for joining the show. If you cannot see my screen, I'll put a chart up there for you real quick. Did you know that 9 out of 10 new traders fail? Since it's up here, I might as well ask you, did you know that? It's unfortunately a true story. Futures Magazine published an article over a decade ago, over a decade ago, stating this fact, and no one ever questioned it. I've not heard one person I've not heard one person speak or write an article that says that's not true. Now, we could write that article because here at CFRN, we don't see 9 out of 10 fail. But in the rest of the world, it is true. And when I first stumbled across that article and that number, it was before we had done what we've now done here at CFRN. So I didn't question it either. But the more I thought about it, wait a minute, 9 out of 10, that's crazy. What profession can you think of where 9 out of 10 fail. Not frogmen, not SEALs, not even brain surgeons. That's a horrible attrition rate. So I said, well, it's got to be a good reason for this. Unless the whole market thing is just a big scam, right? I mean, is it real or not? Yeah, sure, you got your opinion, okay? I was able to connect a thread across the board. 9 out of 10 traders fail for one good reason. They got no one to teach them what's going on, how to read the chart, how to use some indicators, whatever indicators they might be, and then to be there to answer questions. Yeah, just imagine this. What if maybe you were good at football in high school? Maybe you went out for the team. You made the team. You're pretty excited. You're like, hey, wow, I can't wait to meet the coach. Oh, we don't have a coach. No, just a bunch of us guys out here running around on the field bumping into each other. Oh. Maybe you get on an airplane. Maybe you charter a small plane. You get to sit right next to the pilot. Trying to be conversational, you look over and you say, so, where did you go to flight school? And he looks back at you and says, I didn't go to no flight school. Well, but you're a pilot. I taught myself. I really want to go up with that guy. Because the fact that he went up the first time himself without knowing how to fly tells me he may not be as risk averse as I am. Okay, so, no teacher. I mean, just imagine, whatever profession you're in, somebody taught you how to do what you're doing. Unless you reinvented the wheel, right? Somebody taught you, mentored you, kind of showed you the way until the fog cleared and you could see clearly on your own, right? Okay. Now, here's another interesting statistic. If 9 out of 10 fail, 1 out of 10 apparently makes it. Go track down the 1 out of 10, man or woman. Ask them this. Did you have a teacher? 9 out of 10 of those will say, yeah, of course. And the other was just some anomaly, right? So if you've struggled, if you've gone through the boom and bust, you've worked hard, stayed up late, you got 10,000 plus hours staring at the charts, and you've not found consistent profitability, well, maybe there's another way. Einstein says that thing about if we do the same thing, we'll get the same results. I always say if you go down the same road, you're going to end up at the same place. So maybe you got to do something different. Now, finding someone who's willing to take the time to teach you, you may have noticed that's difficult. I mean, there's lots of sites and lots of emails and lots of gimmicks and lots of promises. But at the end of the day, how many of them will just sit with you while you learn and soak all this new information in? Well, let me just say this. If you can find them, they're really expensive. Oh, so people pay big money to learn how to trade? Well, I guess some people pay really big money. Our passport holders, they don't pay a lot, but they get everything I just talked about. Someone to help you, beat back the brush and find your way in the markets. Trading's not easy, but it can be simple. Now, if you want to learn more, call Valerie, 949-42-EMINI, 949-423-6464. Shoot her an email, support@cfrn.net. All right, promised you a chart, and here it comes. S&P 500 Emini Futures. This was yesterday's Logic 247, yesterday's Concierge Trade Alert, today's Concierge Trade Alert. We'll get into those more here in a minute. Let me give you the numbers real quick, and we'll jump over to Michael. He'll give us a recap of what happened in the live trading room today. And I'll come back. Got a little bit of news for you. We'll break down these charts. We'll talk to John. And, of course, we'll have answers to all your questions. All right. These are the numbers I'm giving you are cash markets. In other words, and I know that it's confusing to folks. Like when we talk about the S&P cash market, let me just show you really quick. Oh, guess where I'm going to be tonight? Yep. Fox Nation is coming to Scottsdale. I'll be there. Okay. SPX. Cash market. Okay. Now, what does that mean? Well, the S&P 500 is an index of 500 large cap companies that have to go through a long list of things to be considered for membership in this elite club. It's not just based on market cap, a lot of other qualifications as well. This index only prints from 9:30 a.m. to 4 p.m. Eastern, Monday through Friday. Now, because this is an index, there's nothing to buy or sell. So they had to create a derivative called futures. That's one of the ways to trade this index is through the derivative that we use every day and that we show you here on the charts, futures. Okay? You've got to remember though, futures look to the index for guidance, not the other way around. Because it's got the name futures, maybe it's showing you that, well, the futures look to the index. That's really important to understand. Because what is the index based on? Well, you said 500 large cap companies. Right. Now this price that you see over here, that's determined by the buying and the selling of the stock in the 500 large cap companies. There's a reason price moves back and forth. Okay? People are buying it. Some companies are up today, some are down, some are going sideways. Average it out. The beauty of trading in an index versus individual stocks, or futures versus individual stocks, is that the indices are never going to go to zero unless the world ceases to exist or they outlaw trading. You follow me? Stocks can go to zero. Trust me, I know. I've owned a few that did exactly that. So index, futures, two different things. So watching this becomes important. We got a bearish cross here. Now this is a daily. 1, 2, 3 days ago. Right? We got below the BBC, more than that. All right. So we're back here. Let me just give you these numbers. All right. So cash market. Ask me questions later if I didn't explain it okay. The Dow's currently up 296 points. It's over 1%. Make that 300 points. NASDAQ up 105, that's 1.25%. S&P 500 up 33, 1.25%. Russell 2000 up 18 points, 1.25%. In the commodity basket, crude oil up 99 cents, trading 62.03 last. Gold down $6.90, trading $12.94.90 last. In the Asian markets, the close, the Nikkei was down 124, Shanghai was down 20, and the Hang Seng lost 428 points on the session. That's 1.5%. In European markets, the FTSE gained 77 points on the session, a little over 1%. The DAX picked up 114 points, 1%. The CAC gained 78, and for the CAC, 78 is a gain of 1.5%. So some decidedly different stories around the globe. Asian markets in the red, European markets just cruising like nothing ever happened. Do you ever think of the European markets as a flight to quality? Probably not, but some people are. And they're looking at there's a new flight to quality out there. We'll talk about that later in the show. BTC. Red in Asia, green in the UK. It's a big green Radio Tuesday here in the US of A. Let's go to Michael, get a recap of what happened in the live training room, and then I'll be back.
Okay, I am ready.
Is that okay with you?
That is good.
That will work for you? All right. So you're not doing the Tuesday meeting you don't do them, you're doing
No,
them on Friday now?
I'm gonna make it a Friday meeting now. I think.
Okay,
Because I got those other meetings going on.
gotcha.
I mean, I could do the Tuesday meeting later on, but I'm gonna meet with Troy later on. I think I just emailed him. I'm gonna meet with him later on, too. But I think I don't know. I'll do it on Fridays.
Sure. Yeah, because people can get like a Thursday with Bert and then a Friday with Michael.
Yeah.
Synergy.
Yep. Synergistic sum. That's what it is.
Okay.
All right.
Oh, I'm tapping away at my keyboard. You got the charts?
Yeah.
You got them? Okay.
I got the charts.
Let me
You ready to go?
Mm-hmm. I'm ready. All right. Now, I should probably throw this out. Go to that apply.cfrn.net. Like you
Right
do.
here.
Yeah, like you do. Let me just,
Okay.
because I don't know if
Okay.
Valerie mentioned this to you or not. Yeah, and refresh that page.
Ah.
Now, click that button, and it's like a 50-50 chance that something's going to happen. Scroll down. It probably won't even let you scroll down.
Nope. I won't
What
let me
are you
scroll
in
down.
Chrome?
Yeah, this is Chrome.
So see, now on my Chrome, it works beautifully. But anyway, if you could scroll, if it would let you scroll down, and we had that same problem, Valerie and I yesterday when we were testing it out. But there's a link coming to the website, guys, where you can just like click, and if you got your headset on, you can just leave a voicemail, a voice message. It's kind of clever once we get it to work. But right now it's not working so good. But the reason I did that was because if people go to that apply.cfrn.net, they're going to get jammed up just like you did. Now, Val and I are working on it. Hopefully it's going to be all straightened out today. So, folks, in the interim, you can call us. You can
Email us.
email us. You can. We're probably the most reachable people in the industry because we're like always here. We're either in Telegram, on the radio, or in the live training room. I mean, you can literally reach us.
Pretty much always in Telegram.
Yeah, you can literally reach us 24/7, which is kind of weird. Does that mean we're weird? Or that we're passionate about what we do? That sounds much better, right?
Yeah, passionate sounds better than weird.
Yeah,
Okay.
I'm voting for passionate also,
Yeah.
but a little weird.
Gotta have some weird. Our weirdness has reached international acclaim. I like that ring of that. I'm going to use it. So, all right, it's all yours. I'll hit mute.
Okay, here we go. That was my drum roll. All right. Good afternoon, everyone. Today is Tuesday, the 14th day of May, 2019. If you have not taken a free trial with us and you want to take a free trial with us right now, just for today, normally you would click this right here and it would bring you to something like this, and then you just follow through. But we're having a little technical difficulty right now, so all you have to do is send an email to support@cfrn.net, support@cfrn.net, and let us know that you want to take the free trial, and we will give you all the information you need to take that free trial. Okay, that's that. Now, the spreadsheet. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 14th day of May, 2019. Today we made 20 ticks in crude, and we lost 7 ticks on the ES. That put us at plus 112.5. Today it took 101 minutes and 6 trades to get to the goal for the day. At that point, we were up $100 per contract, and we took a total of 7 trades today. So on the month now, we're up $1,612. That's over 10 days, averaging $161 per day. That's one contract, 2 hours per day. One contract, 2 hours per day. On the year, we're at $10,152. That's over 84 days, averaging $120 per day. Again, one contract, 2 hours per day. Now down here, these numbers are if you were to add one contract per month. If you go back to last year, yeah, let me scroll back up to last year. Is that last year yet? Yeah, that's last year. If you go back to last year, you can see if you added 1 contract per month, or if you started out with 10 contracts. Hang on, I'll show you the totals. Here they are. And you did everything exactly the same as I did. Exactly the same as I did. Then 1 contract per month would get you $250,000. If you started out with 10 contracts, did everything exactly as I did, 2 hours per day, $385,000. Now, we have guys that do way better than that, and guys that don't do that. You know, lots of people are in the middle of the climb of Trader Mountain, as Dwayne calls it. Okay, so to the markets. Now, gold was just horrible today. It was just horrible. We didn't have a single trade on gold. Look, it started out right here at 928. Then it made a leg down, and then it just chopped sideways. I mean, one of these bars was over 10 minutes. All right. Made another leg down, putting in new lows on the day, but now we're into the break. So, and there was still no trade set up there. We didn't have a trade set up anywhere on gold today. And gold lately has been kind of a dog. I was saying that this morning. Over the last 6 days, I think we had 12 trades on gold, and we're minus 2 ticks overall. You know, not like crude where we're plus about 60, or the ES where we're plus about 50. It has just been a dog. And the euro's been just about as bad. Today we had just 1 trade on the euro. It was right here, and we had a break even on that trade. In the pre-market, there was some movement in the euro that you could have taken advantage of, but since then, nothing. And it's not uncommon for the markets to be like this after a huge day like yesterday. Okay. Now, crude, of course, kind of marches to its own drum. Crude did give us some opportunity. There was a short trade right here that I missed that probably would have been a break even anyway. I missed a long right there. Then we picked up on this one. We picked up 10 ticks there, 5 ticks there, and another 5 ticks here to get us to plus 20. And we missed that trade and that trade, both of which would have been winning trades. And then we got into the break. Now, in the break area here, well, we haven't broken this dynamic support yet, so any entry would have to be above the MA1, but it looks like it could possibly give you an entry here on the short side. Now, I'll draw a trend line for you. I'll try to draw a trend line for you. There we go. I'll draw a trend line for you. And there we have a high, 61.87. We'll have a low of 61.83. Down close there at 61.83 would be a shorting opportunity on the crude. Okay. On the ES today, we had just a couple of trades, a few trades. There it is. Started out right here. Yeah, we needed to break this dynamic support. And then once we finally did break it, we had to stop out right here. We're minus 8 ticks there. And then we had a break even over here. Missed a short trade right there. I didn't get filled. We picked up a 1 tick there. And that put us at minus 7 on the morning. There was a long trade right here that, I don't know, for whatever reason, didn't happen. And that ended up working out just fine. And now you're into the break over here. Now, draw a trend line. There was nothing you could do there. Nothing there, nothing there. Yeah, we really didn't have anything you could do during the break. And it's, you know, if you look at it on a larger time frame, if we go, let's say, to a 15-minute. Loading. See, this looks pretty straightforward. The slingshot doesn't. But right now, we just put in a new high. We got a doji at the new high. We just broke a weekly trading zone. So now what it should do is pull back down to this zone here at 37.38, and maybe even a little bit through it. We'll see how it goes, but if the BBC ends up in the middle of it, then that should be a good bouncing point right there. We have broken dynamic resistance right here. And if you jump over to a little bit bigger chart, you can see, okay, everything prints on this chart. You can see it went, the BBC is a little bit farther down, but it's still broken dynamic resistance on the larger chart. Okay. Yeah. And so that is what you should be looking for. And Dwayne will, I'm sure, give you more detail about that in a few minutes. And there was the short on the crude that I just mentioned to you. And it looks like it's happening here on the ES as well. But the ES had not broken dynamic support. Okay, crude had. All right, so back here. If you're gonna read the spreadsheet, you gotta read all the CFTC risk disclosures down at the bottom. Today, we made 20 ticks in crude, and we lost 7 ticks on the ES. Put us at 112.50 on the morning session, and took 101 minutes and 6 trades this morning to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 7 trades this morning. 7 trades this morning. Okay. Now, if you have not taken a free trial with us, go to the home page at CFRN.net. And typically, you would just click right here at the apply.cfrn.net, and that would bring you to a page where you put in your email and how you found us and your name. But right now, if you want to take a free trial with us, just send us an email at support@cfrn.net. Okay, just send us an email. All right. And with that, Dwayne, I can pass it back out. Fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. And Valerie, you have to change your name.
And there we go. Okay.
There it is. Excellent.
All right, this was last week's weekly trading zone. Up here. You don't need an apostrophe in weeks, do you? Or do you? I think it's one of those funny words, has its own rule.
Yeah, I don't think it does.
Yeah.
It's not like a human. It can be possessive.
Did I already say recap of the recap?
Not yet.
Cool.
Recap of the recap.
Let's just pretend I did. Yeah.
Okay.
What is it?
101 minutes. 101 minutes. 6 trades. $100 per contract.
That's a good bingo. I typed in an answer to Mike B's question in the audience. You might have answered him
Hang on. Let
out
me go
loud.
see what it was. Mike, did I sell the bid and buy the ask?
And
Do you sell the bid and buy the ask?
I tried to just make it simple. We buy and sell on a stop. So you might need to explain to him what a stop is. Or
We do. But
he knows a lot about trading, so he's probably
yeah.
knows that.
So
That makes sense, Mike, in the audience, Mike B.
you can buy or sell either side, the bid or the ask. But when we put a buy stop on, you would put a buy stop on the bid side, and we put a sell stop on the ask side.
Here's the thing. The chart is telling us what price to buy and sell at. So we really aren't reflecting on the bid and what's the current bid, what's the ask. It doesn't matter to us, because if my chart tells me to get long at 28.41, I didn't even notice this. Look at this. Talk about your important prices, important areas. Yesterday, the Concierge Trade Alert was to short 28.41. Today, it was put out last night, go long 28.41. So if price is trading 24, here, let me just open it down for anybody that wants to know. Like our price right now is at 28.44 and a quarter. If I had an alert, it would say something like consider being long 28.45 or 46 or whatever the number might be. But if it's long, it's going to be above where price currently is. So with most trading methodologies, especially with stocks, people execute on a limit, which means they want price to pull back and trigger them. And it literally, has to trade through you by a tick to guarantee a fill, and then continue in the same direction it was going. That's kind of a lot of work. So we just want to get in front of price here and let the momentum of the market trigger us in long, which means you go up above price over here. Price at 45 and a quarter. If I want to go long 40, 46, right click, not left click, right click. And there you go. And the reverse, if you wanted to get short below current market price, say you want to get short at 28, 40, 43. Let's go down to 43, right click it. Okay. And that, of course, places your stop, your target, wherever you've set it up down here. So that's how we do it, Mike B. Do you have any questions? Did I explain that okay? Mike says, to trade at 4 ticks, you have to enter fast. So how can Mike trade on a stop? Because we know ahead of time.
Yeah, because they're range bars, so you know ahead where the bar is going to close. And that's what I do all morning long. I'm doing all the math for you. For everybody that's in there anyway.
Every candle is 4 ticks tall. So once price pulls back, gives us the setup that we're looking for, we know, we don't know when that candle will close, but we know at what price it will close. If it doesn't go if we're looking long and it doesn't go any lower, then you can calculate to the tick. Now, the interesting thing about those range candles is the closing price of candle A is also the opening price of candle B, the next candle in line. You'd think there might be a tick of difference between them, but it so happens that there isn't. So with the S&P, you just take whatever price you get in at, and Michael, you do this. You do it all day.
Yeah. Well, I mean, right now, for instance, the ES has a little bit of a red candle for me on a 4-tick range. It's got a high of 45.75, so I know it's going to have a low of 44.75. Okay, I know it's going to have a low of 44.75. So what I could do is put in a sell stop at 44.50 and be ready to go. Okay, and so the sell stop.
There we go. Keep going.
Yeah, okay, I was just going to say. And so the sell stop would be on the ask side. Okay, you right click on the ask side, 1 tick below where you know the bar is going to close.
So this is a 4-tick range.
Yep.
Oh, for argument's sake, let's just say we want to get... Okay, so the low of that candle is 28.45. If price never goes any higher, the high is 45.75. The low is 45. So that's a 3-tick candle right now. So it gives us one more tick down, then we're going to open another candle. Now that next candle, well, let me show you right here. You see the closing price of that candle, 45.75, was the opening price of that candle. Close and open are the same. So you can calculate ahead of time. Now, what we did is we didn't come down, we went up.
Yeah, we didn't get the down close, we got an up close.
And so, and so that order, if you already put it on the DOM, you just cancel it. Mm-hmm. And you got to remember to cancel it if you've already put it on, which is the whole idea of knowing at what price. So here we had a leg, a retracement, pull back to the BBC, down close. So on this one right here, so as this candle's still working, okay, once this high up here is 28.46.75, we know that if it doesn't go any higher, the low is going to be 28.45.75 because there's 4 ticks to every candle. So this one closed at 45.75. This one opened at 45.75. So the way I say it, Michael calls it a little bit differently, but what I say is price pulls back to physically touch the BBC, down close, sell the open of the next candle minus 1 tick. Because I don't want to put this price on the DOM or the opening price here. I want to be 1 tick below so the momentum of the market pulls me in. So that would have meant an entry here of 28.4450. It opened at 75, but you want to buy 1 tick below that, or sell 1 tick below that, which would be 28.4550. And then the swing low was 43. So we went from 45.50 to 43. That's 2.5 points, right?
45.50 to 43.
43.
Yeah.
Okay. Okay. Well, Mike, I hope that answered your question. If it didn't, then just, if you have any further questions, type it in. We'd be happy to answer for you. Is John here? I forgot.
Yep, John is here.
Oh, sorry about that, John.
There you go. I just opened up his mic.
Okay, guys. After we finish talking with John, I will go back to this chart. I want to talk you through these Concierge Trade Alerts and the Logic 247. I'm going to share a little bit of that with you. John, welcome to the show. All right, let me change
His mic is open, but you might have to ding his phone.
Yeah, I'll ding it. Because he was coming right on, and I forgot about that. So. Hey, we're ready whenever you are, John. Okay. He's on his way.
Okay.
So
on his way.
this move here, this morning from 41, got a swing high of 50.50. So that's a 9.5 point move.
Hi there.
Hey there, John. Welcome to the show.
Yeah, great call yesterday on the beans.
Oh, thanks very much. That's kind of you.
I mean, you did kind of emphasize the point that a point move would be $5,000, and it's already gone up more than 1,000. So that, the low.
Yeah, yesterday on the show, we were down here probably about 802.
So we put out a buy it to buy it 808 on a pullback.
Yeah, we didn't pull back, but we
Straight
also
target.
had the Concierge Trade Alert, which, hang on, let me pull that up here real quick. Because I started to see that it didn't really look like, we were going to pull back.
Yeah, if you remember,
not
we
yet.
showed the bottom yesterday. I mean, it looked like a fantastic bottom, and when a bottom looks that good, you have to go with it. And actually, it's worth just mentioning it, the situation with the gold, because as I mentioned yesterday, the daily bottom and a kind of a double daily or double weekly bottom actually is fairly unusual, and it. We did get this jump up to 1,300. We pulled back $4 or so, $5 actually off that high. What's critical now is we've got to move to the next level. We got to, especially the silver. The silver looks all right. It's made a nice bottom to the platinum. So the palladium just turned this morning. The palladium, all of the metals actually look poised, including the copper. We really need about a 1% move across the board in the gold to seal the deal on this up move. And I'd like to see that grow into a 1 or 2 or 3% move. If that happens, then you can, I think you can go with it and probably expect a pretty big move. Just one sec.
Yeah, go ahead. So the Concierge Trade Alert, guys, was now on the beans. We're looking at a big picture trade, a trade that we could see 9. I think 9 is kind of baked into the cake, but we could even. The alert says we could see 10, but we want a substantial pullback before we enter that. So in the interim, I put out the Concierge Trade Alert last night. And I want to explain to you a little more about what those are and how they differ from the Logic 247. The definite difference, and the two can work hand in hand, like a hand in a glove, and then you can throw in the indicators, and then you can throw in the weekly trading zones, and it helps you really triangulate, the optimum place for entry with the least amount of risk. So back this 813, and we put in a swing high at 38. So I'm thinking that's 25. $25 points at $50 per point per contract traded. Soybeans pay exactly the same as the S&P. $12.50 a tick. There's 4 ticks to a point. In the S&P, there's 4 ticks to a penny. 4 ticks to a penny in soybeans. So a 1 point move, $50. This ran 25 points. Now, we don't get out at the swing high or swing low for a very good reason. We don't know it's going to be the swing high or swing low till after the fact. So we gave up on that. We do have other ways of getting out, but that's not it. All right. So you're not going to get out here. Where will you get out? As price starts to come off, with discretionary trading, you can get in and get out anywhere you want, anytime you want. Okay? Or you can wait for the market to give you an exit signal, or you can just simply still be long at this point. Trading multiple contracts, of course, you could be shedding some on the way up. So I think that's 1250. 25 times 50 equals, yeah, it's $1,250 per contract right here. Intraday margins to trade soybeans about $900, I believe, is the intraday. The overnight, call it $2,000. It's just shy of that. And if you're with Daniel's Trading, they have, of course, a margin page that will give you all of the specifics. Now, this was an intraday trade. In other words, this is all transpired so far in one session. If you were to remain in this position and continue to be long this position when the market closes, then you need to be able to cover the overnight margin so that you don't get a margin call. So if Bert's not your broker, call your broker, make sure you understand. And if Bert is, you can always call him at 866-928-3310. Hey, Michael, are you still there?
I'm back.
Oh, hey, John.
Okay. Yeah. So as I mentioned yesterday, the bottom in the beans, in the grains, in all the grains. Look, it's not a perfect bottom in the grains because the wheat came off a lower low. And by the way, so far we've just had a 3-wave rally off this bottom. So you got to be careful. That might mean we're going to come down one more time and test these lows. But I think we found a level around the 800 where the beans, 790, 800, maybe kind of where the beans can find support for another rally if we get down there.
Gotcha.
So, yeah. Also on the market, we're kind of on a 3-wave rally off this sell-off yesterday. We're getting to the higher end of it. I'd be a little bit careful here, especially if we turn down. I think you have to go short again, the market, because we could actually have another bad leg down here. And if you look at the VIX, we've pulled back. We had a 3-wave pullback on the VIX, and if the VIX, TVIX for that matter, gets back about 2670, sort of 27ish, probably look to go back long. The only difference, what we said, we basically said be ready to buy in the morning. I thought it was going to come from a lower level. It didn't because of the way it went up last night. And we actually nailed the lows yesterday on the second down, not the one that rallied on the Trump remarks, the secondary bottom last night. I think we talked about it, you and I.
Now you're on the ES right now, right, John?
Yeah.
Okay. So you're talking about? Are you talking about over here?
Exactly that bottom.
Okay,
That's
gotcha.
where we went long on that bottom, and I did put a sell in, on that first rally, and I had a rebuy above, so we basically still long this rally, but I'd put a stop now at 28, probably 28.40, 45 or somewhere like that, on the S&P. But look, if we kind of get up towards the 28.50, 56 area, then it may be a whole new ballgame. So more back to the bullish side. But one of the things that I did mention yesterday is, because we're tracking 87 a month late, it's given today's the 14th, and the 15th, the middle of the month, was the upward reversal point back in 87 in April for the first rally. So since we're a month behind, May 14, 15 is rallying in the same way. Though you can't rule out possibly even going to a new high in this market. Buffett and Munger came out a few days ago and said that current interest rate stocks are, they use some kind of expression like unbelievably undervalued or extremely undervalued, which really is saying something. And it sort of points to, look, you got this fellow from Sugarood, Dr. Steve Sugarood.
I know who you're talking about.
And you got what's the name of that outfit from Baltimore? The big outfit. Oh, tomorrow is the Jim Rogers thing. The Jim Rogers. That's probably worth listening to.
I know.
Tomorrow.
When is that, and what is it?
Porter. What is it called? Porter's. I just got a mental block. Anyway, the big outfit from Baltimore. They. You've got one group, sort of one half of it saying, get ready for the next crash, right, and the other one saying the market's going to melt up. I think the melt up is a more realistic likelihood at this point. Trump is dropping hints all over the place, saying that why China's stimulating, why aren't we stimulating? Why don't we drop rates down a few points? And for what it's worth, back in 1998, Fed dropped rates 2 or 3 times because there was a dock strike in the summer of '98, and that was kind of like an exogenous event. Right. Came out of nowhere and knocked the market down, and the Fed basically moved in to fix it, and created this unbelievable rally where the Nasdaq went up like 250%. Over the next couple of years. That could really happen again. We're in a point in history where innovation is just like off the charts, and there's so many things going on, and you've got the 5G phenomenon building. That is going to be, it's probably going to be as big a driver as the internet was, internet 1.0 through the 90s. The deregulation of the phone system in the 90s was another big driver. It's just going to bring the world closer together. And then you've got these, satellite systems that could really make, just about anywhere on Earth, internet linked, possibly at 5G. It's a different world altogether. If that happens, it makes things like WhatsApp, and FaceTime and all these things just par for the cause, and available to everybody. And so I wouldn't underestimate the next few years and the whole of the 20s, the roaring 20s. The flying cars and jetpacks are just around the corner, and and medicine, breakthroughs in medicine are just continuing. I mean, they've got this, it looks like they're almost, put it this way, they're on the road to eliminating AIDS, which is a monumental accomplishment. They've got this drug now, which supposedly can limit or inhibit the potential of being infected. That's quite a big deal. So, and the price of the drugs.
I'll tell you where it's really so obvious is in Africa.
Yeah.
I mean, there's 13 million AIDS orphans in Africa, but the landscape is rapidly changing because they've gotten these antiviral drugs there, and they have such incredible. There's people who truly live out, in the boondocks in Africa, and they've got little scooters. Some of these health organizations, they'll go out on these little scooters and they take these, and those pills used to be ungodly expensive. I think the prices come down somewhat, but somebody's underwriting it because these villagers, couldn't afford it. But these people who, 5-6 years ago, it would have been a death sentence. They're leading relatively normal lives for the most part.
Yeah, no, it's a huge look. It's probably, I think that the price has definitely gone down drastically. So it really is getting out into the mainstream, and now they're advertising it a lot. So, the increasing awareness. So hopefully this scourge is on the way to being eliminated. Just getting back to the markets for a minute. The gold, jumped yesterday. It's pulled back $5 this morning. It's actually only down 3.5 now off the highs of yesterday. The silver, meantime, is actually up. And we did say yesterday we thought that silver would pull ahead or catch up. And the fact that it is very impressive. The platinum, a bit disappointing at the moment. Though the palladium reversed, it was down sharply this morning. It's reversed back up. That's a good sign. If you look at the daily on all these metals, they actually look like they're ready to take off.
That's what I'm doing right now, bringing up a daily on silver.
Yeah, I mean, look, there's nothing wrong with that chart as long as it doesn't break down. If it starts to sort of break out to the upside here, it's really I think it's going to, establish a very strong uptrend. A very strong uptrend that's going to probably take us up to that $17.5 area, maybe even upwards towards 20. So, we could find ourselves 2010. Remember, we were at $18.5 when I made my $50 silver call in the middle of September 2010. And said that actually quoted that I thought that silver would hit 50 by the second quarter of 2011, and that's pretty much what happened. It didn't quite get to 50, it got to 48, 49, 60 or 80. But the setup could, perhaps.
We got this double top up here, John, and then we got this little double bottom here.
Yeah.
And now here we sit. You think
third
test might be in the cards?
We got to get going out of here. That's for sure.
Yeah, no, I agree.
It's not going to be good if we break down from here. And I think the tariffs. Look, you never know if they can fix it. They could reach a deal tomorrow. You have to be mindful of that possibility that just out of nowhere they could. They could just meet. I don't think it's going to happen, but
well, you know what, John? Some people think that the news creates the chart, but I know that you and I both kind of believe that sometimes maybe the chart brings the news or foretells the news. I mean, you couldn't have been more bearish on soybeans of late, right?
Yeah.
And now all of a sudden, here we are, and when I was talking to my wife, it was Sunday night, and I told her about, we don't talk a lot about markets, but the soybean thing, I knew she would find interesting because she used to be strictly vegetarian, and she used to eat a lot of soybeans before we found out that soybeans kill you. I mean, everything kills you. So, I noticed
they used to have a lot of soybean drinks. They seem to have disappeared.
Yeah, all the soy milk and stuff. Yeah, they just say it's really not that good for you. But so the fact that these soybeans made this move on really no news. We had a crop report yesterday, and I don't know what it said. But, I mean, after we had that initial run-up after the crop report, I mean, we just traded sideways, and then we caught this pop this morning. That's a nice...
No, the fact that we turned, it should have been more emphasized more yesterday that the crop report, initially we were down, but it did start to turn, we noted that yesterday in our conversation. And of course, it ended up being quite a big deal. So look, this is the best outcome from a crop report now for quite a while. And that's pretty significant, because when beans go up on bad news, that's positive. But certainly got help from Trump saying that they're going to figure out some way to maybe reduce inventories, because that's a very smart idea. What's the point of having a mountain of soybeans rotting away in silos?
Absolutely.
When it could be shipped to people that need it. I think it's a tremendous idea.
John, here in America, do they still pay farmers not to grow certain crops?
I don't know.
but you know what I'm talking about, right? I mean, that was a very common thing for a long time. And that always just seemed so ridiculous to me. They're paying you not to grow that, and I understand the reason behind it, price, but there's people starving in the world.
Yeah. It's kind of like the coffee right now. It's the biggest head scratcher. How coffee can be at 90 cents today, 91 cents. When people are drinking more coffee than ever in history. It's kind of crazy, but
I can't ever get a decent coffee chart here, it seems. I don't know why. Well, maybe try this ETF. Maybe that'll work. Oh, okay. Whoa.
Kind of looks. I mean, I think coffee is close to turning, actually, and the fact that the ETF is this is quite a dynamic structure, and you've got a downtrend line there that breaks. It could really move the needle. We're getting into the Brazilian frost season. Incidentally, there's snow. Further to our comments yesterday about the coming ice ages, we're halfway through May and it's snowing in a lot of places still. It's quite unusual.
Where's it snowing?
Somewhere up north, quite a.
Oh, here in the U.S. Okay.
Yeah,
Gotcha.
and I think it snowed in Nevada, and
I've been in not Reno. What's the lake?
Reno.
No, yeah,
Tahoe?
Lake Tahoe. I've been at Lake Tahoe at the Cal Neva Lodge and we actually got snowed in for a couple of days. This was a lifetime ago, but I actually had an employer, and I had won some sales thing, and he sent my wife and I up to the Cal Neva Lodge for the weekend, and we got snowed in. So I got a couple of days off work, just sitting in front of the big fireplace. And that place has it's so beautiful, and it has such a rich history. Sinatra used to hang out there. The Kennedys hung out there. And have you ever been there? Have you seen it?
No, I haven't, but I have a friend.
Historic, rustic lodge. Yeah, it's really nice. Really
What's
nice.
it called?
It's called the Cal Neva Lodge. It sits right on the border of California and Nevada.
I'll have to ask my friend.
Right
if
at
he
Lake
knows it.
Tahoe.
Cal
Yeah.
Neva.
Yeah, it's really nice. Here's that thing I'm going to tonight. Break out the MAGA hats. Fox Nation's coming to Scottsdale.
Did you talk to those guys this morning?
I haven't yet, no. I'm going to do that right after the radio show. But, yeah, it's a 90-minute program, and the people that are going to be there are Tommy Lahren, Tom Schill, Bill Bennett, Ed Henry. Diamond and Silk will be there. It's worth going just to see Diamond and Silk in person, I guess. And because I'm a founding member of the Fox Nation, we get to go back in the green room and shake hands and all that kind of stuff.
Mm-hmm.
So it should be fun.
Yeah.
So, and
say hello to my sister.
Oh, will she be there?
One of them is called Richardson.
Oh, okay, gotcha.
So, yeah.
I don't know. Let's see.
Silk. I think it's silk, not diamond. It's silk. Silk.
Okay.
That's the one. Yeah.
Did I show you that Coinstar machine the other day? Did I show you the picture of it?
Oh no, you didn't. You told me about it. But,
Yeah,
you
I
didn't.
got it. Got it right here. Click.
I need to get them to follow me on Twitter. That'll help. Or follow us.
Yeah. No, I wish you could be there with me tonight.
Yeah.
That would be quite nice. Yeah. So I go into the ranch market that I was telling you about yesterday. It's our local Hispanic market, and it's just like old Mexico. And I just happened to glance over as we were headed back to get the chicken, and probably one of the last places I would expect to see it. I don't know why, the last place, but I just wasn't expecting it there, and it's right there. Buy Bitcoin here. Now, you can take your piggy bank, because that's what this coin machine's all about, is you pour your coins out of your piggy bank in. You don't have to count it. You don't have to get your hands dirty. It tallies it up, takes a small percentage, and then spits out a little receipt you take to the cashier. And then she gives you folding money that you can put in your pocket. But here you can put, $5, $10, $20 bill in the machine, buy Bitcoin. Now, one of the first things we were promised about Bitcoin when we first heard of it was the anonymity of it all. But my goodness, if you a couple years ago, even a year, if you tried to buy some Bitcoin, one of the Bitcoin accounts I have, I had to send them a copy of my driver's license. The know your customer thing, they were very strict. You really had to prove there was no anonymity whatsoever. But this, we've come all the way around the mountain, and the anonymity we were promised, here it is. Because you could use a credit card on this machine if you wanted to, or a debit card, but you can also put cash money in it, and it spits you out a paper wallet with however much Bitcoin you bought.
Can you put notes in to buy Bitcoin?
Yeah, you can put a $20 bill in, right.
Okay.
Yeah. And Bitcoin, what is it at today? Where are we? BTC. Oh, I got some news that I was going to share, and I will. We're up over 8,000. There's a daily chart.
That's a pretty big spike.
Yeah, it is. Now, let me find a little piece of news that I had. Where did I put it? Right here. This is going to blow everybody's mind. CME, Chicago Mercantile Exchange, Bitcoin futures traded $1.3 billion yesterday.
Is that a record?
It is. The CME Group reported record volume for its Bitcoin futures. Now, this is just futures. This isn't the actual Bitcoin. It's the. Let me bring up that chart. I will use. BTC.
You know what? It's probably the institutions. We were talking about this yesterday. Wow, look at that gap. Son of a gun.
Let me see what comes up on this on the June. Yeah, about the same thing. Okay.
You probably got institutional starting to come into the Bitcoin, and also the reason I mentioned yesterday is a lot of these ransomware things have been happening recently, and
yeah, look at that volume spike yesterday.
They have to buy Bitcoin to pay those, and some of the ransoms are quite big. Secondly, smart money may have anticipated the uptick and pushing the price higher. So you're kind of on a bit of a short squeeze going on in Bitcoin.
Yeah, both the CME and the Chicago Board of Options became the first provider of Bitcoin futures to the market in December of 2017, and saw an all-time record yesterday of 33,700 contracts. That figure represented an equivalent of 168,000 Bitcoin BTC, 1.35 billion, an almost 50% rise versus the previous all-time high of 22,500 contracts.
Yeah, that's pretty significant. And also, the liquidity now is becoming attractive to the futures market.
Now, here's another thing. The CME has earnings warned, over a 17% net income drop for Q1 2019, despite the brisk Bitcoin activity. Now, why do you think this explosive market that we've been in, I'm not just talking Bitcoin, but if I bring up this daily chart, this is one of the most incredible bullish moves, in the history of markets. What we've seen from December 26th of last year to May 1st. Now, why would you think the CME would have a drop of 17% net income?
Don't know.
I mean, this picture doesn't look like fewer people are trading less, does it?
No. The maybe just a short-term anomaly, but look, that double bottom there. I mean, we did say that we'd come back. Look, we'd come back to this previous resistance on the left-hand side, come back to the support on the right-hand side. And I just took while we were just talking, I was looking at Facebook and Amazon and some of these other charts and Twitter and things. And I tell you, it looks to me like we're about to have another big leg up to the upside. And the Bitcoin has been I mean, look, we've had this pullback. I mean, we could be getting ready for a push up through 200.
Absolutely. Sure.
And that would be very significant. And if you look at Amazon, they all look pretty much the same. So, this vertical, melt up could be coming, not in the not too distant future. And the Bitcoin itself, I mean, Bitcoin has been a bit of a market leader. It's tended to move ahead of the market. And obviously this big move up could be a harbinger of things to come.
Yeah, look at that gap.
Yeah, that's I don't think we've never had a gap of that size in the futures, I don't believe.
It's a $500 gap.
Yeah.
As the sky was falling.
Yeah, and it's funny because I just happened to catch a game it was on NBC on Saturday. They were showing a rugby match over in Ireland, I think, between two Irish teams, and one of the teams was sponsored by the CME group, and I thought to myself, that's a bit weird, because it's one thing like have Chevrolet sponsoring Manchester United, but the CME group is not exactly like a household name. However, they may be starting to get into niche markets to get their name out there, mainly because of the future of Bitcoin, which they're obviously, based on what we're discussing right now, it is likely to be, become a very big deal still.
Yeah, I saw a survey yesterday that they were asking, the questions were not, will Bitcoin go back to its previous historic high at just shy of 20 grand, but how long will it take? That's how it was worded. I think it was the options were like, a month, 10 months, a year, whatever. And you can invest at the grocery store. They even got a Coinstar at Walmart. Not all Walmart Coinstars, I've learned, carry Bitcoin, but the one over by our church does. The one by my house doesn't, but I assume they all will. I mean, you got to have a stockbroker if you want to invest in stocks, and you're a real estate broker if you want to invest in real estate. But if you want to invest in the future of money, by golly, you just go to the grocery store, get some bananas, a gallon of milk, and some Bitcoin. This is reality. This isn't someone's fantasy imagination. This is happening now. I think that's what so many people fail to realize, is that people are still wondering if it's going to catch on. Well, I'm sure there's some people that still wonder if the internet's going to catch on. But it's here. Now what do we do with it, and where do we go from here? I don't have those answers. I just know that I kind of want to be in the thick of it. So,
Yeah.
and here I am.
You know, there was the last edition of Shark Tank for the year was on Sunday night.
Oh yeah, I just watched that last night. I recorded it.
Did you see the people selling the dog, the coyote?
Yeah, I did. Oh, that was crazy, right?
Well, did you see how much money they made selling online? Gee, a couple of $100,000. I mean, that's bizarre.
I don't even know. Oh, they called it dog armor. Is what they called it, dog armor. Now, who were the guys that were on earlier that had sold? Oh, did you see the Fat Shack? Those guys were they're bringing. You didn't see the Fat Shack guys? Well, that was on.
No, I did.
It's on the episode, and they have they started up a fast food place.
22 million.
Yeah. And the sandwich has got some French fries. It's got some chicken nuggets. Whatever they got in the kitchen, they put it in those sandwiches. And everybody said how
for those that like that
tasted.
heart attack
Coyote Vest
in Las Vegas. Is it in Phoenix or Las Vegas?
Where? What?
The one where the nurse, they give you these big fat burgers in a kind of looks like a medical clinic.
Oh, I haven't heard of that.
Yeah.
So here, that's not the greatest picture. Those are very nice people. Did they get a deal?
I don't think so.
Oh, here we go. Yeah, look at that. Now, folks, this is so coyotes and other predators or big dogs don't come and snatch up your little puppy and run off with it. This lady, that happened to their little dog. A coyote got it. Now, because I live here at South Mountain, we have coyotes in the neighborhood, and the coyote got one of our cats. So I understand their pain. There it is. Coyote vest.
Body armor. It's priceless. Yeah. But,
yeah, so. Don't they, coyote?
Yeah, this today, as we kind of remarked earlier, these tariffs have a bit of shock and awe about them. There's the initial reaction to them, and then the market sort of digests it and reverses, which is kind of what's going on today. And the way it's happening is we're not there yet. So far, we've taken back about half of yesterday's losses.
Right.
But if this keeps going, and we have a kind of a full reversal of yesterday's losses, that could be very, very big indeed. That could be it's what I call a double daily reversal, and that could potentially power this market a lot higher in the second half of May. So
I think we'll catch a little resistance here at this 54/55. That's one of last week's zones.
It's a critical because it's either a 3 waiver and we're going to go down again, or if it turns into a 5 waiver or an extended 3 or something, then it's a lot different.
If we get through that number, then this week's zones, the next zone overhead for this week is 2868/69. So if we get through that 54/55, then that's the high probability of where we're going to go. Now, this gap lower open that we got on Sunday night, we have resting alerts sitting up here to handle this for the S&P, the Dow, the Russell, and the NQ. Just got to be patient and wait for them to get up there. In the meantime, we traded the down move yesterday, and then we got this up move here today on the Concierge. But this, so 60, what did I say the number was? 68.69. So right here, that's a zone. And then above that, man, we jump all the way up to 2909. Yeah. Okay, what else do you want to cover?
No, I think we pretty much covered it today. It's certainly an interesting turn of events. this last couple of days. So
It really is now, because our narrative, my narrative this morning to all the traders in the Telegram channel was that this week, the natural flow for the week is sideways to lower. You need to get that?
no, it's okay.
And for this session, the natural flow, because of the way we opened last night, was sideways to lower. This is changing that narrative, but I don't think we're done to the downside. And that's just my opinion. I'm the first to tell you I don't know what's going to happen next.
Yeah, like I say, I think it's pretty clear cut now. If we and we may gap higher tomorrow, who knows? And I think, look, what's remarkable is the power. Like the power of this reversal yesterday, the way it turned, and once it turns, it's sort of like just tremendous power behind these stocks. Actually, if you look at the semiconductors, we were 200 not so long ago. We just bounced off 147. So there's been a pretty big pullback here across the board.
What is it? SOX, John?
SOX,
XL?
XX, I think. Yeah, XL is good.
XX.
Yeah,
Okay.
that one's good enough. Yeah.
Hmm.
Yeah. So, is this enough of a pullback are we going to have a vertical up move from here now? And
That looks like a pretty good pullback right there to me.
Yeah.
It's 38 at least, I would think.
Yeah. And look, the fact, we talked about it yesterday. If this is the beginning of the CRB index coming off the lows here and reversing upwards, then the whole world economy could be about to get on the mend, and could be and look, you get guys like Casey coming out and saying we're about to have the biggest commodity boom in 50 years. There's a lot of reasons why that's going to happen. The main reason is there've been 30 trillion pumped into the economy in the last 10 years, and it hasn't. You just have to go back and look at, 2007. What happened the following year when stocks peaked in 2007? Following year, we had beans at all-time record highs. We had, oil up at $150 a barrel. Things like that, and ultimately we had gold going to all-time highs. So there was a big inflationary period right after the stock market boom, and since we've been in a boom for 10 years without inflation, we've had stealth inflation, but we've had unreported inflation that's really there, and now you're staring down the barrel of 25% increase in prices. If that doesn't result in average inflation of 6-7% or something like that, something's not right. So the impact of this inflation is likely to be felt. Even the 10% tariffs they put on, just in the steel and all the other stuff that's gone up in price, those inflation, it probably takes a year for those to be reflected in the environment, in the economy. So I think the inflation is coming in the next few years. And generally speaking, the gold market tends to anticipate it ahead of time. So we're pretty close to, and if we are breaking out on the CRB index, it's going to automatically lift prices in the metals going forward, and they're probably going to build on themselves. And so we could be looking at a record, a huge recovery here, a huge rebound that ultimately could result in all-time highs. So,
yeah, I certainly won't rule it out. Anything's possible with this market, and the fact that that Trump is now, if he wasn't already keenly aware of it, he certainly is now. He can move these markets with a tweet.
He sure can.
We've lost $1 trillion in market cap. Go ahead.
Yeah, just as comments this morning, basically saying, we're going to win no matter what, and he's probably right, because look, he's changing the dynamics. The major dynamic that's going to change everything is the dollar. If the dollar goes down starts to go down, I mean, it's going to be mega bullish for stocks. It's going to be mega bullish for assets. And it's going to be very good for the U.S. because it's going to, I mean, in some respects, the U.S. is overpriced in terms of its, wages and cost of production and all that kind of thing. So bringing it down to a more competitive level, a more homogeneous level with the rest of the world is probably going to be very, very bullish for the U.S. And with remember, 2/3 of all the Dow components get their revenues from overseas. So automatically, if the dollar goes down and the currencies go up, revenues are going to go through the roof in the Dow stocks, and that's going to be very bullish for markets.
Yes, it will.
And it's going to fix the deficit problem with China and a lot of other countries too. So it's a huge winner, and it's overdue for an adjustment. And I think ultimately it will guarantee Trump, a landslide win of monumental proportions. And there's nothing wrong with bringing a bit of inflation into the economy at this point. That's what could look, if you add a couple of percent inflation to the GDP over the coming quarters, you could have some pretty big numbers in the GDP. If you go back and look at the 90s, the late 90s when we had that mega growth into 2000. A good bit of the GDP there was actually inflation, and that's when wages went up. That's when there were more millionaires created than ever in history, and hopefully we've got something similar just around the corner right now.
You very well could be right, John. Well, ultimately it's coming. It's just a matter of when. And
yeah.
The company you were trying to think of earlier, was it Stansberry?
Stansberry, yeah.
Yep.
Right.
Joan and Wayne both got that. Way to go, guys.
Okay. Well, listen, thanks very much for the invite. And,
okay, John. If I do get those guys on the phone, once I talk to them, I'll call you.
Yeah, give us a buzz before you go there tonight, because I got a couple of ideas for you, and
okay.
Maybe we can.
Sounds
okay,
good.
Great. Thanks. Bye-bye.
All right, bye-bye. Okay. What John was just speaking about, I'll be sitting with the producers of Fox Nation tonight. Let's have a little conversation. I don't know that we'll be sliding any napkins back and forth, with a hastily written number on it or carefully written number. I don't know that it'll go there, but hey, you never know. It's a good time to be alive, right? I think so. All right. On the S&P, Concierge Trade Alert, 2841 up to 53. So what do we figure out that was? 41 to 53, 12 S&P points, $50 per point, $600 per contract traded. And on the Dow, the alert last night was to be long 25505. Swing high so far 25668. That's a 155-point move, and we don't have an exit signal yet. Let me show you what an exit signal looks like in case you don't know. All right, going back to yesterday where we did get an exit signal, finally. We had a Logic 247. That's our 24/7 Emini alert service. It runs from Sunday night at 6 p.m. Eastern till Friday afternoon at 5 p.m. Eastern, around the clock. We had an alert to be consider being short, ESM9 at 2850. We also had a Concierge Trade Alert, consider being short 2841. So either one of those now, important prices, important areas, almost always tested. As you can see, we came through 2850, we put in a low 44.25. Back above the trigger, bumped right up against that weekly trading zone, which we expect to be good resistance. Whenever we approach it from the bottom, we expect it to be good resistance. Until proven otherwise, it was good resistance. Now, right here, okay, it's really the same dynamic. Yeah, I realize that over here, we only pulled back that far, right? And now we've pulled back all this great distance. But the important thing is this number here. Doesn't matter what time frame you're on or what market you're looking at. The clock on the wall is always price. 2041 long, 2041 short. Yesterday, today. It didn't dawn on me that they were the identical number until it came on the show today, which wouldn't have changed anything when I look at the chart. You know, I'm focusing on what's in front of me when I do the Concierge Trade Alerts for today, and I'm not really so worried. The fact that it's the same number, coinky-dink, important prices, important areas. Okay, so whether you got short at 2850 or you got short at 2041, the market did not give us an exit signal per our methodology and indicator sets until right here. The close of this candle, 2814. Exit signal 2814. Why is that an exit signal? Really simple. The black line is called the step line, and when the step line, okay, we're in a down move, okay, an alert that says to consider being short this move. Once the step, well, let me rephrase that. When the move is running out of steam, price will tend to walk sideways, as it did here. When the step line goes from the left side of that falling CFMA1 to the right side, in other words, it crosses over, the exit signal is defined, a short move, by the first green candle that closes above the step line after it crosses over. Doesn't get you out of the swing high or swing low. Nothing can but luck. Does a pretty good job. I mean, the swing low was here, 2802. So, 12 points off the low. But from 41 to 14, 41 minus 14, it's a 27-point move at $50 per point. So that's a $1,350 per contract move from this entry to this exit signal. Now, what do you have to do special to stay in a trade to the exit signal? Nothing. That's the whole idea. You do nothing. Now, you need an extended move for the exit signal to function properly for you. So when we have a short move, 2, 3, 5 points, it really doesn't come into play. But once we start exceeding what is the average swing on the S&P, in case you don't know, the average swing on the S&P is 3 to 5 points. We are experiencing some increased volatility at the moment, but historically, going back many years, break down a chart, you'll go, wow, I never noticed that. Well, I never noticed it either until somebody pointed it out. So then I spent the next few weeks just grinding through the charts, because I had to own it. I had to know if it was an actual market truth or just somebody else's urban myth. Turns out it was the truth. My truth. Now you got to do it and see if it's your truth. Okay? But it's kind of a handy little thing to know. So on a 3 to 5 point move in the S&P, the exit signal is not going to come into play. But an extended move, see, like right here, 2041, and what's the high? 53. Okay, so this is a 12-point move so far. We know we're coming into what is potentially good resistance, because the last time price tried to trade up through there, couldn't do it. Took a dive. As long as price is below the BBC, we expect lower prices. Once it gets above, we expect higher prices. That sounds incredibly elementary, perhaps simple, but it is simple by design. Okay? There's a lot of complicated stuff out there with lots of moving parts that do what they were created to do just fine. But they don't do it any better than this. So, a standing challenge. I mean, everyone wants to complicate this. With 50 million different things you got to look at, it doesn't increase your profit. Our passport holders have been watching a series of Mark Douglas videos here over the last few days. And that's just opened so many eyes. And it's very rewarding for me because I've been a Mark Douglas evangelist since before we became friends. And, before his untimely passing. But it's been a good time. And the relationships that are developing in the active member, the passport holder discussion group, they're pretty strong. And I'm really moved to see how many people are starting to get it, to really understand. Not that it's that hard to understand, but because we've been thrown so much stuff and so much noise that just absolutely complicates the market. So I think vendors can line their pockets. But hey, I'm a vendor, right? Now, earlier I was, why can't you find a teacher? And if you find one, look at how much you got to pay to get taught. Well, when people ask me, well, hey, if you can trade, why do you teach? Because it pays good money. Any book you read written by someone who's generationally wealthy, somewhere in that book, they're going to tell you something along the lines of, you must have multiple income streams. If you're getting fat off something over here and it's humming along, well, you better get busy generating another avenue, another pipeline, multiple streams. I think Rockefeller said 7, maybe it was 5. I think he said a minimum of 7. Now, for many of us, that's kind of hard to fathom. Whoa, I'm going to run 7 businesses, or no, it doesn't have to be a business. It could be some type of investment, but it's an income stream, right? Okay, so you're with me on that. All right, simple, color coded, and I say the same thing in the Telegram channel, in the discussion group, over and over all the time. But it's interesting how at different times on different days, someone will go, oh, I've been doing the same thing every day, but the fog is so thick because of all the stuff and noise that's been thrown at us. It takes a different amount of time for it to part, for the fog to part, for different people. But it's always fun and rewarding when somebody goes, oh, now I get it. Because once you see it, bless God, you can't unsee it. So I hope you see it. Now, Dow, Concierge Trade Alert, consider being long, 25505, ran up 155 points. No exit signal yet. There we go. Okay. Now over here, our exit signal. Oh, we didn't put up the concierge from Sunday night. So on the Dow for Sunday night, it was considered being long at or above 25. I'm sorry, short 25660. We had an L2 and a concierge at the same price. Is that correct? Let me take a look. That wouldn't be unheard of either. Okay, scroll back to Sunday night. YM. Here we go. YM. It's a short 25660. So we actually had a Concierge Trade Alert and a Logic 247. Same price. And from 25,660, put in a low down here at 25,215. $660 minus 215, 445 points. And the Dow pays $5 a point. S&P pays 50. The Dow pays 5. Important prices, important areas, almost always tested. Now, let me try to explain this through the eyes of one of our traders. Okay, price comes down through this old weekly trading zone. We trigger, we pull back up to the BBC. Now, we expect the weekly trading zone to be good resistance when we approach it from below. And when we approach the BBC from below, there again, we expect it to be good resistance until proven otherwise. And it holds more often than it doesn't. It held there, didn't hold there, held there, held there, held there. Off to the races. Okay, so 445 times 5, $2,225 per contract. The only problem is it's a little tricky trying to get out at the swing low. But here's our exit signal. Same explanation as with the ES. Step line crossed over. First green candle that closes above that step line. 25314. So 660 minus 314. $346 points times $5 per point is $1,730 per contract traded. Now, you had two different alerts pointing you to this entry at the exact same price. And then, as long as price is on the left side of this falling CFMA1, all you have to do is nothing. And sometimes doing nothing can be really difficult. Basically, when you get a, this was sort of a violent pullback right here. Didn't change anything because we're looking at a 30-minute chart here. Now, we train on a range chart on a quicker time frame. It's kind of like gets you in shape, right? It's like running with ankle weights. Now, when you take those ankle weights off, you can run like Forrest Gump. Yeah, kind of like that almost. When people move from the range chart to the time-based chart, the 30-minute, or some of the other ones that we might use, but primarily it's just the 30-minute, they get there's a great sense of calm and relaxation because they're fine-tuned. Boy, they know how to get in there and get business done real quick. But here, it's not a foot race; it's more of a stroll. Leg and a retracement, the leg and a retracement, leg and a retracement, and a leg. Exit signal right here. This move, no exit signal yet. Now, what will happen? Price will start to walk sideways. Just like it did down here. Price will start to walk sideways. No rush. Step line will cross. And then we'll have a red candle close below the step line. And that will be the exit signal. Okay, Russell. All right. Sunday night. Let's see what we did. Sunday night, Russell, short 15.59. So here's the gap lower open from Sunday night. All of the indices, same thing. So 15.59. And be right in here somewhere. CTA. $15.59. And then today, let's have a look at that one. Monday. Long at or above 15.41. And there we are. 15.41-ish. Come on. Close enough. All right, so long. $15.41. Okay. And the swing high so far, 15.47.80. So from 59, let's just go ahead and find that exit signal. Okay. Price on the left side of the falling CFMA1, extended move. Step line crosses over. First green candle that closes above the step line. That closing price, 15.27.90. We'll just call it 15.28. So 59 minus 28 equals 31 times $50 per point equals $1,550 per contract traded. Now, that's not if you could somehow get out at the swing low or any of that business. It's from the entry to the exit signal. I much prefer having the chart, the market, price tell me when it's time to get out of a trade, rather than using some fixed number or, you know, what I think it's going to do or could do, which we always have, you know, a hard target. On our alerts on the Logic 247, by nature, the Concierge Trade Alerts don't carry a target. And I'm going to explain the difference to you here in just a second. Well, $1,550 per contract traded to the tick, because this gives you the exit signal. So what do you have to do down through this? Nothing. And again, sometimes that's hard. So 15.41 up to the swing high so far, 47.80. I don't know, we got 7 points, we'll call it, times 50, $350 per contract traded. Okay. And will we get an exit signal here? Well, if we continue to move up, we should get a valid exit signal. How much further? Now, if it looks like the Russell kind of not keeping pace with the rest of the gang, here's the ES again. There's the Dow. Russell. 2,000 small cap companies versus the S&P's 500 large cap companies. Okay, let's do one more. And let's do one more. Okay. Over here, yesterday, we consider being short 7,500. That's the Logic 247 alert. Now, let's see. Sunday night in Q. short 75.14. So I've been just a little bit up above that. $75.14. So it's gonna be, yeah, right there. I had put it in already. I just couldn't see it. There it is. Okay. Now, yesterday when we discussed this, we did not have an exit signal yet. No exit signal yet. Did the market finally give us one? It did. Oh, chart's gone wild. Slow down. All right. So let's call it 7,500. The S&P price stayed on the left side of the falling CFMA1. Step line crosses over. First green candle. And that close is 73.59. So that's going to be 140 NQ points from the entry to the exit signal. 140 times $20 per contract traded, $2,800 per contract traded. Now, yesterday we didn't have an exit signal when we were talking, so wherever we were at down here, the number with the exit signal is 2,800. Okay. And then today, Tuesday, I mean, the alerts came out last night, 6:45 p.m. Eastern. I always try to get them out before 9 p.m. at the latest, whenever possible. So for the NQ, consider being long at or above 74.15. 74.15. 74.15. And the swing high, 74.59. Which is at 45 points. 20. That's $900 per contract traded move, right there. We'll get an exit signal. Yeah, if we can move up a little bit higher, we should get a pretty good one. Crude. Let's see what the alert was for. Came out Sunday night. Short crude 61.15. Yeah, that was down here. 61.15, right on the nose. 61.15, and the low was 64. 61.15. Minus 60.64. $51 ticks at $10 per tick, so $510 per contract traded. So we did it. Important prices, important areas, almost always tested. So we get back above the trigger, and we did it again. And then we got back above the trigger, and we did it again. When I do the recaps in the Telegram channel, in the beginning of Logic 247, I used to try to track how many times each one triggered, and it's just too many. When you get a nice trigger on Logic 247 or the Concierge Trade Alerts, there's a high probability the price at some point is going to come back. Could be in the next hour, could be over the next 24 hours. It's going to come back, get above the trigger, do it again. Last night on crude, so being long 62.10, and we've just brushed up against that area. In fact, Right here on the Daily Double, we're looking for 62.20. Now, the Daily Double, the Concierge Trade Alerts, and the Logic 247, that's the 24/7 alert service, those are all included with the CFRN Passport. And that is everything a trader needs at one low price. If you want to know how low can it go, send an email to Valerie, support@cfrn.net, or call 949-42-EMINI, that's 949-423-6464, and just say, hey, I heard that guy yakking away about the passport on the radio today. Could you send me a price list, please? We're not the people that have a million things to sell you. We got two. You can become a CFRN partner, which is a 90-day mentoring program, or you can become a passport holder, which is lifetime, never expires, and it includes everything under the CFRN roof. The daily doubles, the weekly trading zones, the workshops, the live training room, every day, Monday through Friday, for 2 hours. And unlimited one-on-one mentoring. So you get 2 hours of group training every day, and then whenever you need a one-on-one session, self-serve. You just go to the website, you book it, we meet up in a go-to meeting room. You can see my charts. I can see your charts if you want me to. And we spend 45 minutes going over whatever it is you need to go over. Because each person is at a little different spot on their journey up Trader Mountain. So wherever you're at on the journey, that's where we'll discuss whatever it is you need to discuss at that level. Not talking above you, not talking below you. I teach all the traders how to be ready, have a list, come in, you got questions, we just attack them one after the other. We go to the charts, we look at trades that worked well, trades that didn't, and the why. Okay? Everything a trader needs, one low price. If I could have found something even remotely like this back in 2005, my life narrative would probably be significantly different. But, yeah, it just wasn't in the cards. And so, what are you going to do, as they say, right? We finally got there. Now, the question is will price be able to pull back to 28.32, which you see right here? If it can, you might want to consider being long 28.34 up to 37 to 45. Just a thought. Okay. All right. Good word for the day. Take one more peek at the SPX cash index. This doesn't look like it's over. What do you think? Love to hear it. Now, see how this could pull right back up, touch the BBC? I could initiate the next leg back down to test the 24 or possibly the 38. Now, that's 100 points below us, but that's okay. Look how long the market's been climbing without a decent pullback. These retracements are very important to the health of a bull market. Without them, it just runs out of energy. Okay. Good word for the day. Restoring damaged people. Part 4. He wanted to see who Jesus was. Luke 19:3. The Bible says that Zacchaeus was a chief tax collector, and if you've not studied the history of the times in which Jesus lived, there was probably no human being on planet Earth more desperately hated than the tax collector. And some might say that's still true today, but we won't go there. But it certainly was back then. Filthy, evil, vile, rotten to the core. That's what people thought of the tax collector. Zacchaeus, he wanted to see who Jesus was, but because he was short, not the market, just short. He could not see over the crowd. So he ran ahead and climbed a sycamore fig tree. Luke 19, 2 through 4. Now the story of Zacchaeus teaches us that being rich doesn't protect us from being damaged goods. How some wealthy people got damaged is in the story of how they got rich. When you violate your conscience, it's hard to live in your own skin. When you trade your core values for money, your success can be hollow and your guilt heavy. Zacchaeus struggled with this, and he said to the Lord, if I've cheated anybody out of anything, I will pay back 4 times the amount. Luke 19:8. Now, if that's how you feel today, Jesus is trying to say 3 things to you that he also said to Zacchaeus. Number 1, make haste. Don't put off your salvation. At any given moment, you're as close to eternity as a faulty heartbeat or a malignant cell. Don't gamble with your soul. Get right with God while you can. Number 2, come down. See, Jesus said to Zacchaeus, make haste. Then he said, come down. Get out of that tree. Come down. Humble yourself. Kneel at the feet of the one who loves you and gave his life to redeem you. Doesn't matter how badly you failed. We all have. If we confess our sins, he is faithful and just to forgive us our sins and to cleanse us from all unrighteousness. 1 John 1:9. And number 3, Luke 19:5. Jesus said to Zacchaeus, the short guy up in the tree, the filthy, evil, vile tax collector, Jesus, Lord of all creation, tells the guy up the tree, today I must stay at your house. Man, would that freak you out or what? I mean, you edged up into the crowd, nobody likes you, you got up in a tree, you're short, you can't see, so in the tree you can't see, and the guy you came to see all of a sudden looks up and goes, yo, make haste, come down, today I must stay at your house. Wow. Have you ever wondered when Jesus comes back what he's going to catch you doing? There's a 33.33% chance, I suppose, that he'll catch you sleeping, but what about the rest of the day? They say integrity is what you do when nobody's looking. But somebody's always looking. What will we be doing when he comes back? I hope, if I'm not sleeping, that he will see that I am about my Father's business. How about you? Today I must stay at your house. The Greek word for stay means to continue to be present or take up residence. Refuse to live another day without the assurance that Christ lives in your heart, directs your steps, and watches over all that concerns you. That's a good word for the day. Okay, getting a little red here up on the chart. Price looking for the BBC. We had a short narrative below us. All of those alerts remain valid. The gap fill alerts that we have overhead all remain valid. If price gives us this pullback to 28.32, we've got a narrative right here to take advantage of that up to 28.45. Now, here's the deal. At 28.45, you're in an extended move, right? 32 to 45. You can get out at the final target just because it's a final target. But if price is still on the left side of the CFMA 1 and the step line hasn't crossed over and price has not begun to walk sideways yet, why abandon a perfectly good trade? I mean, we will have literally waited almost all day to get into this if it materializes. But if it doesn't, that's okay. Because by being patient and waiting, we know that what we're doing is we're taking advantage of only the highest probability opportunities. Not every move in the market is an opportunity. Certainly not a high probability opportunity. Well, will I wait all day for one high probability trade setup? I'll wait 2 days, or 3 days, or a week. If you want to gamble, there's always Vegas. Free cocktails, beautiful people, right? Gamble in Vegas, earn a living here from the chart. But in order to do so, you've got to become disciplined. You got to have patience. Remember, patience is not the ability to wait. It's what you do while you're waiting. All right. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. You know that Mouse Without Borders thing that Dr. Tom turned me on to? I gotta uninstall it. It's causing me more pain than pleasure. I'm sure you could live without knowing that, but if you were thinking about ever installing it, well, just let it be known. Yeah, it just, why? I said too much already, right? All right, so yeah, I guess you're not going to get an outro today with the disclaimer. What? Most days it works. Yeah. There we go, at the bell, you know the deal.
1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.